Good morning, everybody. Welcome to today's 1 million by 1 million strategy roundtable for entrepreneurs. 1M by 1M, as you know, is the first and only global virtual accelerator in the world for technology startups. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. Notice I said annual revenue and not funding. We're not trying to fund 1 million companies. 1 million companies cannot be funded. 1 million companies should not be funded. So we are looking really at revenue and, focus on customers. This is our 658th free mentoring roundtable. We started way back when in 2008 with an experiment that then led to the launch of the 1M by 1M program in 2010. So here we are, 658th session. Today, we have the pleasure of having Benjamin Narasin, founder and general partner of Tenacity Venture Capital. Ben has been here before, so you may have encountered him already. But we have a new series going on right now, so I invited Ben back to weigh in on his thoughts and analysis of the AI investment opportunity, both from an investor point of view, and also in that you will understand, how to play it as entrepreneurs. Ben, welcome. Great to have you back.
Nice to be back. Thanks for having me.
So Ben, how are you parsing this AI dominating popular consciousness new trend?
It took me about 18 months to make my first generative AI investment. Now, I made my first AI investment about 10 years ago during the very early rise of neural networks and machine learning. And, interestingly, neural networks were originally constructed for AI in the 60s and were discredited and thought not to be functional. And then they started to work based on the computing power we have. Well, LLMs were not something that I believe was ever previously tried in any material way. But now that we have computing power to make it work, feels like it is the go forward standard for material levels of sort of Turing test level AI. So I spent about 18 months meeting with a founder who had sold an early days AI company to Google, who I have known for about 20 years. And we would have breakfast every week and just sort of talk through the philosophy of sort of how one builds a moat or, the value of data over time. It took me quite a while. I'm not a thesis-based investor per se, but for such a massive wave, a shift, I wanted to have a point of view as to...
I'm just going to say you have to have a point of view to play your hand.
Well, the analogy I came up with that was always, which made it take so long for me, was when the car was invented, there were 2,000 car companies in the United States. And my question was, how am I going to figure out who will be Ford? I mentioned that to somebody that was an automotive investor, for one of the big automotive shops. They all have venture arms now. And he said, yeah, there was 2,000 car companies in Germany too. He said, the reason the Audi has 4 circles on it is it's the merger of 4 companies. So, this is not uncommon in the birth of a new technology, that there's an enormous amount of people trying to attack a very, very, very large space. The question is, how do you bet on the ones that you have a disproportionate chance of winning with? So having said that, 18 months in, I ended up making 3 investments this year, and all of them have been generative AI. It's not that I've only looked at generative AI. It's just that's where the biggest and most exciting opportunities are. And as a last point, what I would say is that the most exciting things always draw the most brilliant entrepreneurs, because the brightest people always want to go to whatever the most exciting area is. So it's rare these days to find a really brilliant, driven entrepreneur that isn't focused on some variation of AI.
So let's double click down on your 3 generative AI investments and understand what you've invested in, why you chose to invest in those particular startups, and what can we learn about the broader trends from those choices.
Sure. One of the early decisions I made was that it's not really viable for me to invest in sort of truly formative technology, the LLMs themselves. I'm not going to put money into OpenAI at, whatever, $150 billion. Although I did a couple of years ago counsel some LPs that they probably should consider it. Hopefully they listen to that counsel, because they're doing pretty well right now. On The hardest thing to invest in this category is what I would call the Chat GPT wrappers. This is where you take the existing engine and you put your value add on top of it, and then you run off to market that. Because there's obviously no way to protect the technology. So then the next question becomes, can you protect it in some other way? And we can talk about that in a second. But the first investment I made is as close to that as I have gotten. It's a company called Maestro, Maestro, out of Seattle. And they are built to be an all-knowing chief of staff throughout your organization. There are multiple companies trying this, but they appear to be the best. And it was referred to me by a founder in my portfolio, my personal portfolio from before Tenacity, that I've actually funded twice. And he said, this is what I would be doing if I wasn't running the company I'm running, which was succeeding quite well. He said, I've tried all of them, and this is the best of them. So I looked at the product, I looked at the team. What I like about their vision is, like I've run companies, I was an entrepreneur for 25 years. The minute you get past about 10 people, you no longer know what's going on in your company anymore. You don't know what individual people are doing. It's just not within your capacity, not at a granular level. And certainly once you get past 50, you don't even necessarily know all the people that are in your organization. So having this all-knowing chief of staff that can tell you what to look at in each part of your organization takes founders and CEOs and managers back to the point where they actually had a very small team that they were with all the time. It gives you that insight. And because of that, it is valid, in my view, to any company in the world that's over 10 people. And that's a huge market. So I'm excited about that one. Very early days, but seems quite compelling.
So question before we move on to the next one, on this one, what kinds of insights are being tracked by this chief of staff, AI chief of staff?
Well, so while I mentioned that it wants to be the all-knowing chief of staff for the entire organization, they're starting in the engineering stack. So they attach to your various systems, whether it's GitHub or anything else. And they could, think of having a virtual human just sort of hovering around the department. So maybe it is that there's more tickets happening in a certain part of the business. Hey, this particular piece of your software offering, we're seeing a slight growth in the amount of inbound requests for aid, or maybe we're seeing a project slow down a little bit, or maybe we're seeing a previously extremely productive engineer or engineering team start to change in terms of that productivity. So, I almost think of it, this is probably not the most positive version, but like a hall monitor for the individual business units. They're starting with engineering because you obviously have to start with a focus and then you grow from there. But the founder that referred it to me actually uses it for his whole company, even though that's not what it's built for yet. There was a great off-Broadway play that became a really bad movie called Other People's Money. And it was always my fantasy to have exactly this. It was a story of a raider that would, a corporate raider, a Carl Icahn type. And he would wake up every morning, he would walk over to his computer, which had a name like Aileen. And he would say, Aileen, what do I look at today? And this one day, Aileen said, you should buy, Connecticut Cable and Wireless. And he said, why should I buy it? She said, well, they have, $600 million worth of inventory, another $400 million worth of land leases, $500 million worth of receivables. You can buy the whole thing for, $600 million. You should be able to make another $400 million when you sell it. So it was just this system, this machine that was just out there looking all the time for just the right thing for him to do. So that's how I think of this. It's that system that just looks at it the way you would look at it if you were constantly monitoring every part of your business.
But you want, I think what you're hinting at is this system is then going to track whatever it is observing against certain KPIs.
Well, I mean, the nice part about an LLM versus a traditional system is you don't have to give it KPIs, right? It's going to learn. It's going to watch and learn and make its own determination. And so that's what's intriguing to me is it might be something you never thought of. I use simplistic examples like tickets or productivity, but I don't know. It could be that who knows? I mean, because I wouldn't have ever thought of it, I won't think of it now. But maybe there's a feature that was meant to do one thing, and that's what it was doing for a long time. But then when someone did an upgrade, all of a sudden that feature started to change its behavior, and the system can notice that. So that's what's so fascinating about LLMs. You're not, if you think about before neural networks and machine learning, even people tried to teach AI how to do things, and that always failed. And it was only later when they allowed AI to go out and learn that things started to get exciting. That's how the early computer vision projects worked. You couldn't explain what a cat was. You couldn't tell it what a cat looked like, but you could give it every picture of the cat on the internet that's ever been created and let it learn what a cat was, and then do the same thing for other images.
Yeah. Okay, let's go to your next example.
So the second example is actually a company that one of my founders I had funded out of Tenacity, whose business was not able to raise a Series A, ended up joining. Very exciting company that is, in essence, started, it's called SF Compute, or San Francisco Compute. And it started as sort of AWS for GPU, because GPUs are dramatically different than CPUs, and ended up morphing into something far more exciting, in my view. They are building, in essence, the CBOE, the Chicago Board of Options Exchange, for GPU compute. So this will allow initially people to go long GPU compute, but eventually they could also short it. So it turns GPU compute power into an asset, in many ways, just as tradable as gold or oil or corn or, orange juice. So what that empowers at a functional level is that if you're building on a system and you're going to be ready to run that system and train that system in, say, 6 months, you can pre-buy capacity, irrespective of how much you need, in 6 months to do what you need. If you need 1,000 GPUs for 1,000, that are all contiguous, and you need 1,000 hours, then boom, you can go ahead and buy that. If you are a data center that runs GPUs, you can also put your inventory into the platform and therefore optimize your ability to sell. Also, it creates a great model for sort of, they can make money whether there's a glut on the market or a scarcity. So one of the things that excited me about this, you may remember this, but I was a freelance food and wine writer for about 10 years. And during the time I was covering wine, a movie called Sideways came out, which made Pinot very, very popular in the United States. Well, nobody expected that. It was a total surprise, an outlier event, and people didn't have much Pinot to sell. So all the major producers ran around trying to buy up Pinot producers and buy up vineyards, but they couldn't get enough inventory for the demand the consumers had provided. So they started planting. Well, it takes 3 years before you can make wine out of grapes that you plant. So guess what happened? About 4 or 5 years later, massive glut of Pinot. So you went from a shortage to a glut, and it changed the market again. Pinot's still very popular. And so I like this because it's a stabilizing element in the market. Whether you have a glut or a shortage, this is the place where supply and demand can meet and create effective pricing and, in essence, have a liquid market, which is desperately needed for this, because this is going to be, just a huge consumer of this GPU power will be all these businesses that are being built.
So, and it operates as an exchange?
Pretty much. I mean, yeah, there'll be market makers, but yeah, you can think of it as like the New York Stock Exchange for GPU.
Okay. All right. Interesting. Innovative.
And the third one, which is the most recent, is a company called ScalePost. And they are a true marketplace for data for training LLMs. And so their clients are people like Time Magazine, the Harvard Business Review, and then on the other side, people like Perplexity. And, right now, we're still in those formative days where, similar to when music started to stream, the original holders of intellectual property rights are concerned with how their intellectual property is being used and whether they're being adequately compensated. So folks like Condé Nast, and I think the New York Times as well, are suing people like OpenAI for using their content to train their LLMs. My view is better to have an economic model than a lawsuit. And so this allows people to post access to their content in this marketplace, which can then be rented to train the LLM. So you're not selling the data off. People won't own that data, but they will train their LLMs with it. And whether that's broad, and they're starting with editorial content. I think they have about 50 major publishers right now. So one of the reasons I'm so excited about this is that during my own journey to having a point of view here, I came to believe that data is only a temporary advantage, only a temporary moat. In the early days, people will enter into exclusive arrangements. I have an investment in a company personally that does basically nursing by LLM, meaning They ingest the nursing notes of hospitals and doctors. They train the LLM to act like a nurse, and the LLM calls you after you leave the hospital or the doctor's office to do a follow-up to make sure things are going well. And this is awesome, not just because it's a great business and it's enormous, but because, it could, in theory, save lives. It's called Hippocratic. That's a personal investment. It's not a fund investment because it's much, much later stage. The idea, though, is that I don't know this for certain, but I believe that all the data deals they did in the early days were probably exclusive to them. So that gives them a head start. But over time, any provider of data is going to come to realize that the value of their data is far more than they can monetize on their own. If you're going to make $10 million off of your partnership where you've given exclusive rights to your data, that's great. But if you can sell the rights to use that data to train other people's LLMs for $1 million a piece, and you can do that 100 times, well, ultimately, you're going to realize that your data is a fungible commodity and a valuable one, and you're going to rent that out to the highest bidders. And so I believe that data will give people a head start, but I don't think over time they'll be able to protect whatever data they're accessing, because the economics of data will become too compelling. Look at Reddit as an example. That IPO and the public stock market pricing appears to entirely be driven by the fact that they're getting paid something like $60 million a year to allow their data to be used to train LLMs. Not something anybody would have ever thought of. But I don't know if those deals are exclusive. I suspect they're not. But if you have one deal for 60, you'd be better off having 5 deals for 30. And I believe that is how things will evolve. I believe there will be a market, an open market, and this data will be sold over and over and over again. Because again, nobody gets to keep it. They train their LLM learns. It's just like a teacher in a school. They teach the student goes on. Then you teach another student. It's a very valuable function as well for businesses and in some ways society, in the case of things like Hippocratic, where you're doing the job of nurses that we don't have enough of.
I don't know what the terms of the deal are, but you must have seen that LinkedIn has just started using their data for training LLMs as well. And it kind of came a little bit as a surprise, and the community is not terribly happy about it. So
yeah, I think people get up in arms about a whole bunch of stuff that they don't need to. A little, angels dancing on the head of a pin. There's no distinguishable personal data about me in any of the data that I'm in that's used to train an LLM. I go back to, if a high school teacher talks about my prior business, fashionmall.com, to teach somebody something about business, well, move on. I mean, that's not horribly problematic for me. It isn't. I don't worry that LLM is going to sort of keep some special data just on Ben and go forward
right.
from that. So I think people also become much more.
We have a question from the audience. Sanjeev Munjal is asking, does that mean that business that have a lot of historical data can generate LLMs better for banking, insurance, etc.? Is how his question is phrased.
Well, that's sort of my point, is that's a temporary advantage. If your business has historic data. Now, here's one of the things that I learned a long time ago. Every business thinks, since data became valuable and big data became a business, that they have a data lake. The problem is a lot of them have data swamps. Data is not useful in any possible way. Now, LLMs probably change that materially, but I think the advantage to any business of their own data in training LLMs is temporary. Because even if you decide to protect your data and not give it to anybody, unless you are the only one that does whatever it is you do, and I'm not aware of any of those, certainly not banks or insurance companies, then someone else will eventually realize they can make so much more money licensing their data to train other LLMs that you'll be surpassed. I've heard varying points of view as to the efficacy of highly proprietary smaller data sets versus broader large data sets. Originally, it appeared to me that the larger data sets were outperforming the specialized ones, but it's not clear that's entirely the case anymore. But I just can't imagine a specialized data set so specialized no one else has it. So I think people have it's like people overvalue their own assets in a lot of ways. They overvalue the sort of proprietary nature of what they're going to be able to achieve in the most case. I mean, banking and insurance were the two things mentioned. You're talking about the two largest industries in the world. There are just so many players. You think that your bank has got the special secret sauce. Well, okay, fine. Somebody else is going to train off of 12 banks and do a better job than you are. So wouldn't you rather have the better product? Wouldn't you rather be using the better service? Pet peeve of mine, I have lots of credit cards, are the ones that don't pay for the high-end fraud detection stuff and constantly waste my time with alerts. Why?
Yeah.
Citibank is an example. I don't think they buy anybody's software that's useful as far as I can tell, because the customer experience is atrocious on this, shutting my card down just because I was in another country where I bought the ticket on their system. They've decided, assumedly, that they have to use only their own internal systems to do this. Ridiculous. Use the best stuff, right? It doesn't have to be invented here. Make your fair taste better.
I want to comment on one thing you said and then ask you a follow-on question. It is true that small language models are getting a lot of consideration, but the point of view is not because they are more proprietary, more it's because they have less hallucination.
Well, I think they're related but different topics. So it's small language models also have cost advantages, but there have been different experiments. The first time I heard about this experiment, it was, I believe, run by Google. They trained an LLM solely on higher mathematics, but then they put it up against an LLM that was given 10x more data, but no explicitly higher mathematics data, and it's still, the larger model outperformed the smaller model. But more recently, I have heard instances where more focused training sets have outperformed larger ones. So I don't know. I think it's too early to tell, but I think the small LLM versus large LLM is also relevant at a sort of broad scale versus specialized use. And I think it's probably entirely fair to say there's going to be less hallucinations, although it feels like that's being worked through. I'm a pretty active user of Perplexity, which somebody wrote a story about, which is Perplexity is a BS engine, but I've found it to be a pretty reliable source. I use it for a variety of things. I'd probably like it to be a little more expansive. And I'm going to start using other engines as well, because I think you just got to compare and contrast. Look, we all need to make intelligent human decisions based on the inputs we're given. So I think it is incumbent on us to make sure that we are. I'll give you a random example. I mentioned Reddit. My youngest son, as far as I can tell, if there's a 15-second clip on Reddit, he takes that as gospel that was handed down in a leather-bound Bible. And we get into a lot of arguments about this. And I'm like, I need to see the source data.
Yeah.
I want you to show me where this came from. The fact that somebody, or, my wife sends me a TikTok and it's like, yeah, I'm just not sure this is valid. Because let's face it.
That is the problem with user-generated content, is the source is not really not always credible, often not credible, often a lot of BS, and that's
well, there's another issue as well, which is that there's this fascinating, I would argue, homogenization of data and of news. Because if you think about, prior to using the internet and various streams as your primary source of input, you had a specific format. So every day, where if I have a half an hour, I walk across the street to the library, I read the New York Times and the Wall Street Journal. Those are the two they get that I want to read. If they had the FT, I'd read that too, which I used to subscribe to. And so I know where that data is coming from. I know the source of that material. But when you're looking at Facebook as an example, whether it's the Wall Street Journal, the New York Times, or Ben's House of Mud, random rant, it's all in the same form. And so it homogenizes the data such that you look at a piece of content from the New York Times and it appears exactly the same as Ben's House of Mud rant. There was a great example of this where a story was circulated around Silicon Valley, which I won't repeat, which somebody talked about in our Monday meeting. And I was like, where did that come from? I looked it up online and I found it was on Facebook, and I clicked through. It was from a satirical newspaper like The Onion. It was a made up piece of comedy, but the person had read it, and enough people had read it as if it was news that it spread as a rumor, as if it had actually happened.
And that's really bad.
The only reason I've started to think about that a little bit recently, to be honest, I'm sort of talking to think right now, is that LLMs also provide us with a homogenized end result. And so one of the things I like about Perplexity is it shows me the sources. I will admit I very seldom click on them, But when I do on occasion, I usually find something, and that gives me a little more confidence. We gain
There's some
confidence over time.
attribution. So coming back to what you said about the data not being a long-term defensible moat, my follow-up question on that is, what is, in your view, and in the portfolio that you're developing in this field, what are you envisioning as a defensible moat?
So my thesis, or hypothesis, I guess, is that this will be very similar to the early days of the web. So I started a web business in 1993. Nobody knew how you would defend a web business. Anybody could start a website. Everything was one click away. I believe that first to market is possibly useful, but what is more important in my view is first to brand. I do believe that consumers and businesses tend to go with brands they know and trust. So once you are established as the brand, then I think you have a disproportionate chance of winning. I think it will be harder to have monopolistic like outcomes, but there's also, network effects, et cetera. So think of my data marketplace example, ScalePost. They've already got 50 major content providers. If you got Time Magazine, I don't see any reason you shouldn't be able to get any other major publisher. They will feel confident that you are doing things in the right way that is appropriate to a brand of that substance. Harvard Business Review is an even better example in some ways. So the brand here is the confidence that this is the company to do business with. So if somebody comes along and is like, well, I can do it cheaper. Okay, well, who are your clients? Oh, I have Creative Loafing from Atlanta, the free newspaper they give away. And I have SF Weekly, the freebie. And like, yeah, maybe not. I'm not saying there isn't room for a second player, but the more content they have, the more resources they have, the bigger and better it becomes. Here's a great example. Back in the day, there were about 12 auction sites. Microsoft had an auction site. Netscape had an auction site. Amazon had an auction site. And there were people that believed those auction sites would be valuable across the board. But today there's eBay. Now, eBay was the second. There was a company that came before them called On Sale. But in my view, they were first to brand. They then got a little bit more traction. What happens is sometimes you have these races where somebody pulls ahead a little, then they pull ahead a little bit more, and then they just take off and they're so far ahead it doesn't matter anymore. Are you going to go put your stuff on 12 auction sites? Well, if you can get all the volume out of one, then just do that one. And by the way, you're always going to go with the biggest because you have the most resources. Are you going to go shopping across I do happen to go to multiple grocery stores because I'm a little neurotic about where I buy what. But generally speaking, if Whole Foods has everything you need, you don't need to go to a second shop. I mean, it's pretty rare these days to find an actual butcher shop or a fish. When I moved here, I couldn't even find a fish store. So a fishmonger. So I do think first to brand could be a very, very material part of this. And then I think there is some opportunity to be a semi-monopolistic player, which I think is possible for both ScalePost, where you're being the sort of, for lack of a better term, New York Stock Exchange of content rights, and for SF Compute, where you're being the CBOE of futures and rights to derivatives on top of GPU power. Because everybody wins better if one group wins biggest. It creates effective markets, liquid markets. I mean, yes, you have the New York Stock Exchange and the NASDAQ, and that's it. Fine, there's room for two. But you only have the CBOE, by the way. I'm not aware of a second options exchange.
So there is, in the examples that you're giving, that is absolutely correct. There is one thing I want to point out for the audience is that, remember, all the companies that came in, so software was being sold by large companies to large enterprises. And then there's this whole category of software companies came in and priced very low SaaS offerings and started selling to SME. That was a very different business. And their customers are really the no-name customers, and lots of them. And that was the strategy that they followed successfully. So that is a valid strategy.
So there's another place where you could see a reason someone could have a competitive advantage. And this comes from the founder I spent so much time with, who's actually the founder of Hippocratic, Munjal Shah. His point was, there was a time very similar to what you just said, where if you could sell me something 80% cheaper, I would be willing to tolerate 20% failure rate. That's not viable in certain industries using LLMs.
That is correct.
Right.
That is
The
correct.
example would be legal or medical. So in legal, if you go in front of a judge and use something that turns out to be a hallucination, you're not just going to lose the case. You could get disbarred. Like, you do not have the ability to just be wrong 20% of the time. In medical, when his LLMs are doing nursing calls and they hear that somebody has shortness of breath, they immediately divert that to a human being. You cannot take the risk of putting somebody's life at stake because
Yep.
you did not understand that something was a risk factor. So there will be an opportunity in industries and places where there is no ability to be wrong for highly reliable, sort of bulletproof LLMs that can probably charge a lot more and will ultimately be the player because people will trust them and they don't care about the fact that it costs more because the cost of failure is so extreme.
Nonetheless, there is still a go-to-market strategy and a positioning that is a price-based positioning going
Sure.
to the low end of the market.
Yeah, it depends on where you are. Like, generally, like, there's an old saying in the apparel business, which I used to be in, and it's true of pretty much everything: price, quality, speed. Choose any two. If you're in an industry where quality is paramount, you can't afford to mess with price. So, I'll give you an example. I was stunned that the Bloomberg box was never displaced by the internet. I met Mr. Bloomberg at the very beginning of the web, and somebody in the room asked him, what do you think about the internet? And he said, it's going to be the biggest thing you've ever seen in your life. And I'll believe that when you show me a CB radio in your car. And I thought, wow, this is an incredibly brilliant man. How can he have this huge blind spot? His business is more at risk than anybody's business on the planet. His business just delivers data to you in a box on your desk for a stunning amount of money.
Yeah.
But he never got displaced. And the primary reason for that is probably because the Bloomberg box is also your email. You are not giving up your email. You have decades of legacy communication and experience and financial transactions and everything else on your Bloomberg box and all the history. And by the way, for somebody that's making millions of dollars a year personally, which is probably the case for many of the people using a Bloomberg box, although I'm sure there are plenty of people that make very little, you're not going to take the risk just to save 10 grand or 150 grand or whatever it is it costs. So there are places where you will pay what you need to because the downside is too material for you to have a mistake made or to go with a cheaper product. There are other places where that's not the case. And then there's a third instance, which I find quite interesting and slightly disturbing. So one of the first companies in generative AI I almost funded but didn't was a Y Combinator company that pitched that they would use LLMs to take orders at drive-throughs in fast food restaurants. And I thought, wow, that's great. How hard is it for an LLM to say, do you want fries with that? And the turnover of those team members is incredibly high.
Yeah.
Typically teenagers, not particularly skilled. And I thought this could be really interesting for several reasons. One, it's such a niche-y, weird idea. I doubt anybody's going to attack them anytime soon, although somebody just pitched the same darn thing at YC literally 2 weeks ago. But it's been 2 years. The second reason was I thought on this first to brand market, if they could land McDonald's, then they'd be good to go because no one's going to buy. If you're the one that's running this for McDonald's, then I'm going to trust that you do it right. If you're the one that's running this for, I don't know, Big Boy, I'm probably going to be a little less convinced. Now, here's the problem. I didn't invest, by the way. The price was too high. At the end, McDonald's announced that they were going to build their own team to build their own LLM to do exactly the same.
There's a lot of that going on in Fortune 500 right now. People are building their own stuff.
So stupid. It's insane. I mean, what a waste of time.
But one of the things that I'm excited about in what's happening right now is the smaller businesses' ability to afford technology. And for that to be more and more interesting, there will need to be more and more interesting technology available at really low prices that are affordable for the small businesses. And that opportunity is still very big.
Well, also keep in mind that affordable is a relative term, right? If you haven't, so one of the things that's distinct, actually probably unique about LLMs, again, going back to those philosophical debates I was having, this is the first time in human history that software has been able to attack actual labor Previously, software just attacked process. So a very typical thing that would happen when somebody would come in to pitch some sort of system of record or business system is, oh, what do you compete with? We compete with Excel spreadsheets. We compete with paper and pen, if you go back far enough. But now these systems can actually do the work of human beings. The Hippocratic example is an excellent one. These systems are calling people and doing the work the nurse does not have time to do. Now, I'm not worried about nurses. One, we have far less nurses than we need.
We have fewer nurses than is needed.
Yeah, and there's plenty of things for those nurses to do. They're horribly overworked. It is, no LLM is going in to draw blood, right? But to do the work that is drudgery, but is still important, makes sense. So because of that, so now imagine that in your business, you have a person who you could use for all kinds of interesting things, but all they have to do is call all of your customers every time they've had a project done and just make sure the project was done right and make sure they received their invoice and make sure it's scheduled for payment. Well, if that person's earning, $36,000 a year and you can buy a piece of software for $1,000 a month, $1,000 a month is not cheap for software, but it's a lot cheaper than $36,000 a year for the person making the calls.
It's true.
And then that person can do more productive things. I mean, we all want to see ourselves and others rise up to do the most productive things they can. However, we also have to get stuff done every day that if it doesn't get done, creates big problems. So it's sort of almost like a Maslow's hierarchy, an evolutionary thing, where the more of the things on the bottom of the pyramid you can slice off, the more self-actualized things the human being can do.
Yeah, and I think there's going to be a mix of, right now, there are a lot of investors who are also talking about their investment thesis in AI, generative AI, being human-centric AI, so that there's a human in the loop. And then some of what you're talking about of a complete replacement or complete of the human from the loop is the other opportunity. So it depends on the domain, it depends on the specific function, and those decisions are very specific to the particular situation. But I think those points of views exist. Some entrepreneurs are focusing on the human-centric side, some are focusing on the complete replacement. Both of those are coming up.
I mean, historically, we've been worried about technology replacing humans in lots of different ways, but there's always been, it's been better than we've expected. We're too pessimistic. We fear things that we probably should embrace. There's two great examples in robotics. One is the ATM and the other is the automatic gas station. So there are two states in the United States where you are required to have a human being pump your gas for you. There is nothing more infuriating than pulling into a gas station, getting out of your car to pump the gas and having some guy say, hey, you can't do that, that's my job. And then waiting for him to show up to do it, and then waiting for him to come back to get your payment. It's like, are you kidding me? You're paid to make my life less efficient. Why? Yeah. Almost certainly unions. I couldn't say enough bad things about
that gratuitous insertion of human in the loop.
That's terrible. You don't hear the worst of all, and my least favorite union stupidity. In New York City, there are still buildings that require an elevator operator to push the button. It's not even an operated elevator. It's literally a button. And when you walk in, you're not allowed to push it. Give me a break. So here's the thing, though. People were worried when they put in one of the first robots, which was the credit card reader in a gas pump. Oh my gosh, all these poor people that were pumping gas are not going to have a job. Well, here's the thing. Gas stations are not owned by Shell. They're owned by mom and pops. They're owned by significant amounts of immigrant communities. It's a great place to start. It's a great place to build wealth. So when they make more money because they no longer have to pay somebody to pump your gas, maybe they paid, I don't know, $100,000 for the meter, but now they have nobody to run it. What did they do with it? Did they put it in their bank account and say, whoa, happy me, I'm going to throw a party? Of course not. They're business people. They reinvested. That concept created the convenience store and gas stations. It takes a lot more people to run a convenience store than it does to pump gas.
So last question, Ben, time-wise. I know you're passionate about food and, the whole food-oriented lifestyle. What is your view about cooking?
Well, I like to cook. I mean, this is similar to my look. I bought a sous vide machine. I've never used it. I'm not. I already mentioned that I go to multiple grocery stores to buy my food. Like I tend to try to shop the day I cook. I'm not interested in stocking up. None of that's efficient. There's no logical reason why I should go to one farmer's market for eggs and a different farmer's market for stone fruit, and then go to a butcher for meat, and then go to someplace else for other ingredients. But it fulfills a different part of me. I like to be the cook in our family.
Yeah.
I enjoy doing it. Probably stereotypically, yes, I do like to cook steak on a grill. But it's just I don't need. There are places where convenience is useful. I'll give you a good example. I got my wife this super fancy espresso machine, and it broke, and now I got to make pour over coffee. What a pain in the butt. I'm not neurotic about coffee. I don't even like coffee. I just want a cup. And so I would much rather have my robotic coffee machine grind the beans, heat the water, make the coffee, than have me boil water, grind beans, put them in a thing, pour the stuff over. That's not my thing. I'm sure I do know people that love that. That's their thing. It's sort of meditative. But I'll take a robot for my coffee. I'm not interested in a robot for my food.
So here's I'm like you. My husband actually also is a very good cook. We love to cook. Cooking and entertaining is very much a part of our lifestyle. It's really central to our lifestyle. So on Monday night, we went to another friend's house, and they prepared a very nice meal, and we all sat down to dinner, and it was a Monday night, but it was a perfect, full on elaborate dinner. Now, one of the guests, there was a fifth person, and he said, "Wow, I'm jealous. You guys are all." Uh, Actually, he said to the two men, "It's like you both have wives who are great cooks," and I said, "Well, Dominic is a great cook. That's my husband, and Eric is a great cook. That's Jasmine's husband." So he's also actually Eric is more starting to cook now. He's not a great cook yet, but he's getting there. And Abe said, no, that's not what I'm saying. My wife is not a cook. So it really puts a problem on my social life, because I like to have people over. And if we want to have people over, we have to hire help and so on and so forth. So I think your perspective of being really easy with cooking and entertaining, our perspective is the same, is actually in the minority, not in the majority.
Yeah, I have a founder coming over tonight wanting to use my house to do a dinner for a charitable fundraise, which I said absolutely no problem. Apparently, my wife feels a little less excited about that idea. But he's just going to get catered food brought in. When I entertain, I'm like, it's important for me to be the cook.
Yeah,
Or like, as I think I wrote about wine for a long time. When I do a party, I usually centered on some exceptionally high-end wine or spirit. And I don't hire a bartender. I'm like, no, I'm going to be the one telling the story. I'm going to be the one pouring the taste. First of all, I do tastes. We're not here to drink. You're pouring super expensive stuff. It's more for people to have the experience and the education. But that's part of that. It's all, look, I'm both outgoing and a neurotic introvert. So for me to man the bar is perfect, because everybody has to come to me and I don't have to go anywhere. And so I can talk to each person for a little bit of time. But then again, my responsibility is to then serve the next person. So I also have that ability to sort of keep moving versus, my whole life is pretty much made up of only two things. It's made up of my family and my founders. I love what I do. I have no hobbies. I have no interest in sports or concerts or any of that stuff. It's just this. So anytime I can do something centered around this, it's all I want. And so that makes me suboptimal as a party guest to non-entrepreneur specific events. And it's a constant source of friction for my wife and I, because we'll go to a party, holiday party or whatever, with our friends. And somewhere between 20 and 30 minutes in, I'll walk over to her and say, I'm going to walk home, or I'm going to take an Uber, or I'm going to take the car. And she'll be like, I can't believe you're going to leave. I'm like, yeah, I'm just done. They started talking about football. I don't care. Or basketball or baseball or whatever random throw a ball, hit a ball, kick a ball thing. I'm like, yeah, I got them to talk about entrepreneurship and venture for about 15 minutes, but then they started talking about that guy that threw that ball. I got to get out of here. By the way, the phase is always the same. I'm starting to talk to the husbands, and until they start to talk about sports, as soon as they start to talk about sports, I leave. I go talk to the wives, but they don't want me around that much. And then I'm like, sorry, got to go. And she's like, I can't believe you're so antisocial. I'm like, I'm social all day long. I can be social for 12 hours if we're going to talk about my founders and how you can help them and what I can do for them and what you do as a founder.
You
and
talk
blah, blah,
about
blah.
cooking and food and wine.
They don't, I do
They
think
don't care. That's the problem. They don't
anomaly.
care. You care. They don't care.
Exactly. We're all selfish with our interests. And I think sports were pretty much invented so guys would have something to talk about at parties. And it's like they don't have the ability to talk about anything other than, hey, did you see that great game? So, I mean, look, I respect the fact that it takes an enormous amount for an athlete to succeed in what they're doing. It's just not something I'm willing to put brain power towards. There's all kinds of interesting historic philosophical gatherings like Benjamin Franklin's Juntos, which I tried to recreate, and I've done those sort of things where you have a topic that really expands the mind. I love that. I also think that's additive to my job and to my helping entrepreneurs and everything else. But I just, I don't know why we drifted off on this topic, but net, if it's not about a founder or my
catch
family.
up on all this over dinner maybe, but I'm going to
there you go.
let Sylvie speak. Ben, thank you very much for sharing your perspective. And, things are moving so fast. So I'm telling everybody who's coming to this series that we will catch up in a few months and see where things are moving to. We'll know more, on all the issues.
Well, thank you for having me again, and have a great event.
Bye. Talk to you.
Take care.
So, folks, we're going to do an entrepreneur pitch next with Sylvie. Remember, this is not Shark Tank. This is a safe working session. So you can, relax. You don't need to be nervous. You don't need to be defensive. My only goal is to help you and, give you some input with which you can make progress. So Sylvie, please unmute your line and tell us what you're working on.
Okay, thank you, Sumana. I will do this when you can go to the next slide. Is this okay?
You're from Bruges, Belgium.
Yeah, I'm living in Bruges, Belgium.
My husband is Belgian.
Okay, nice. We can talk afterwards. Okay, and Ben, I think we can be the perfect match. We can talk about business and startups and entrepreneurship. And the people who use FrameUs can talk about their idols. And when they go to the concert and the sport game, they want to take selfies with their idols. Sometimes just like me, and I'm Sylvie, the founder of FrameUs. But what do the people see when they arrive at the venue? They are not alone over there. All the fans want to have a selfie with their idol. And that's the problem today for the celebrities. It's not possible to give all their fans what they want. The celebrities don't have the time for all these fans. And then we don't even talk about security or about fans that not in the possibility to be at the venue. What if there is a solution that gives celebrities the possibility to serve all their fans without any limitations and create a revenue stream for these interactions? Well, it exists today. FrameUs. Today, FrameUs is in the app stores with the demo version of the selfie frames, but you ain't seen nothing yet today. What if you can take an exclusive selfie because you are live at a concert or at a sport game? What about the idea to have a meet and greet from in your sofa at your home? Or have a weekly walk with David Beckham with VR technology? Or meet other fans in the meta world? And today, there is a huge demand for personalization in the fan engagement sector, but also the influencer advertising market is a huge growing market, and that's our target market.
So one point on your slide you have here as market opportunity, the market analysis that we look for is bottom-up TAM analysis. So don't jump into market opportunity without explaining your business model. You haven't talked about your business model. What is the business model?
Yeah, that's coming now.
So that's what I'm saying. That should not come after. Market
Okay.
opportunity should be explained as a bottom-up market opportunity that is rooted in business model, pricing model, and so on. So this is like a top-down market opportunity that doesn't tell me anything.
Okay, perfect. Thank you. So I need to think how to arrange. Okay, thank you. So why we are in the influencer advertising market, we are selling logo placements and brand exposure on the selfie frames, and that will be shared on the socials of the fans. Because of the share and revenue streams, celebrities are in the possibility to monetize their interactions and create new income streams without the limitations of traditional engagement like meet and greets or one-time videos. What about the idea of creating a selfie frame with a shared revenue for foundations like Tony Robinson Foundation or something? So that's our business model. And this model, let's give us the
What is your
possibility.
business model? I don't understand. What is your business model?
So we are selling advertising placement. We are selling advertisement on the selfie frames. Sorry?
I don't like it.
No?
No,
And
I don't think that's going to work.
okay, can I ask you after the presentation why? Or can I ask it now?
Right, absolutely. This is
Why?
not the logic of how is this advertising business model? So you think people are going to spend a lot of time in the app and that's how you're going to advertise to them and that's how you're going to monetize?
So the monetization is you go to the app, so the fans are going to the app, they take a selfie with the celebrity, we create the selfie frame that's now on the screen, and on that selfie frame, the advertiser is paying for each selfie. So, and we create a huge view for the brands because the fans are sharing the selfie frame on their socials. So when I'm sharing something, all the people
So this logo here is the ad that advertisers are paying for.
Yeah, that's correct.
But
Yeah.
how are you going to track this? You know, they're going to share it on social media. They're going to share it on Facebook. They're going to share it on TikTok. How are you going to track it?
Yeah, so the brand is paying for each selfie that's taken, not for each sharing. For each
But the brand
selfie,
is not going to want to pay for that. The brand is going to pay on the basis of how much it's getting shared, and you have no way of tracking that. That's why I don't like it.
okay, thank you. I want to learn from it about your thoughts and your experience of it. So
Brands at the advertising business model, if you look at, I mean, I'm just going to give you a very, very quick basic primer on how advertising business models work. You pay on the basis of CPM, online advertising, CPM, CPC, cost per million. CPC is cost per click. So you pay on the basis of impressions, you pay on the basis of views, you pay on the basis of reach, you pay on the basis of actions. These are the clicks, actions. These are the methods of paying. Just because somebody took a selfie and you put your brand on it, that's not how advertisers pay. So this business is not viable with those assumptions. You're going to have to rethink it.
okay, thank you. Thank you for the feedback. Thank you.
You're welcome.
Yeah.
I hope it was helpful.
Yeah, I need to think about something. Yeah, thank you.
So you're definitely not ready to raise funding because this business is not going to work. And obviously no investor who knows anything about online advertising is going to touch this.
Okay, yeah.
All right.
Yeah, we need to rethink maybe something.
You need to rethink. You need to rethink.
Yeah, thank you for your feedback. Thank you.
So folks, those of you who are considering joining 1M by1M, let me quickly explain to you how to use the program. So 1mby1m.com is your starting point for everything. The premium program is our full acceleration program. You can join the program, get weekly roundtables mentoring roundtables like this, and you can come to as many as you want. You get investor introductions, but you have to be ready for it. So if you read the investor introduction section of the website, you will see I talk about being ready. We will help you get ready, but you have to put in that work. We have a curriculum that is very elaborate, all case study based. So you get to learn from lots of entrepreneurs who are part of the case study program. And then we also, when you're ready, we also help you with marketing. And influencer marketing and digital marketing today is a very big, benefit. So I happen to be, especially on LinkedIn, I happen to be a very big influencer. So we have some capacity to help you get your word out there. The basic program is our curriculum only version. So if you just want to get started and just study curriculum and get a feel for how to put your one foot before the other, that's 1M Basic. So go look at the website, what to expect from basic, premium. If you're looking for private guidance, so it's just you one-on-one with me, that is one-on-one consulting. We've had a lot of requests for that, so we do offer it. It is more expensive. Premium is $1,000 a year. Basic is $99 a month. One-on-one consulting is $1,000 an hour. So it is more expensive, but it is available if you want it. In October, we have 3 more free roundtables. If you're looking to pitch, those of you who are listening today, if you're looking to pitch, please sign up. And if you have questions about the program, please contact Irina Patterson on our team, irina@1mby1m.com. She can get on WhatsApp with you, phone, Skype, whatever, and you can have a conversation with her. If you have any other questions, I will take them now. Anybody? Question? No? All set? All right. Okay, we're going to adjourn then, and we will see you next time. Bye.